Hi guys, welcome back to the YouTube channel. In this week's video we're talking all about the autumn budget that's on the way, 30th of October, what's been leaked, what's been rumoured so far, what you can do about it now, what you need to know, and everything in between. So as we know, Keir Starmer, we've got the first autumn budget coming our way 30th of October, and in terms of changes that are on the way, it's very wide ranging what's at stake here. As part of Labour's manifesto, they've mentioned that the direct taxes for the ordinary working class people aren't up for stake here. So what we mean by that is income tax, VAT. They've put in their manifesto that they've put a commitment in place that these are going to stay the same. But what could change? Corporation tax could absolutely change, tax on businesses. We're looking at what's been leaked so far in the media. One potential massive change which has been rumoured and leaked heavily in the media this week is changes to capital gains tax. Labour have long been an advocate of raising capital gains tax, usually to somewhere around income tax rates is what they've long mentioned. A lot of their think tanks have supported this decision, and now we're seeing that this might be coming to fruition. So we've seen in the media Rachel Reeves have been testing what the impact would be in terms of tax revenue to increase in the top rate of capital gains tax. Currently, the top rate is only 24%. It was actually reduced. It was 28% on residential property. Now it's only 24%. But Rachel Reeves is looking at raising this to potentially 33% or 39%. And a 39% capital gains tax rate would absolutely be disastrous to the UK economy, because it wouldn't increase tax rates as they think it will. The tax take, rather, what it would do is just disincentivise people to invest, to build businesses. At the minute in the UK, when you build wealth, it's usually via a company or through assets. Through capital assets is how you build wealth. And paying close to 50%, 39% in taxes, that would just disincentivise people from investing in the UK entirely, because it wouldn't seem worth it, or it would take that investment offshore. A lot of people watching this are probably property investors. You've got UK companies. It's long been speculated that capital gains tax is increasing, so the vast majority of people watching this have probably started reducing their portfolio or started the process of selling their business, as record numbers of entrepreneurs have. But if you haven't started this process yet, my advice is, if you are looking at exiting in the short to medium term, look at accelerating that before the budget. Start marketing the properties. Any tax changes will probably take place, they'll be announced now, but take place actually in April. So you've got a little bit of time to get that sale in, exchange contracts, secure that tax rate at the current rates rather than new rates that might be coming. If you've got a property portfolio and you're a long-term investor, well, realistically, there's probably not much you can do. It'll just be a case of when you do sell your properties in 5-10 years' time, then that tax rate will be at play, and that's what will have to be paid, unless we get a different government in by that point. Touch wood, we do. Reform come in, somebody sensible come in and look at making the UK pro-business and an attractive place to live, work and invest. I just want to stop this video here to make sure that if you haven't already, you do hit that subscribe button and that notification button, so that as soon as we drop brand new tax-saving, wealth-building content, you get notified and can benefit. Back to the video. Other speculated tax changes include changes to employers' national insurance. So for most employers who have more than 1 or 2 staff, who do not basically fully utilise the employer's national insurance allowance, that £5,000 tax-free, most companies pay 13.8% on pretty much their entire staff salary that they pay. You've got a small national insurance threshold of £9,100, but everything else over and above that, 13.8% is a tax an employer pays when they pay a salary to an employee who also pays tax on that income tax national insurance. It's absolutely crazy how it works, and 13.8% payroll tax there is absolutely top heavy as it is. It makes it very expensive to employ staff. And as a business owner myself, we work with thousands of business owners. Having that employer's national insurance in place at 13.8% already is a massive factor when it comes to growing a business, because recruiting in the UK, developing talent in the UK is just that bit more expensive, which often leaves a lot of our clients have no choice but to outsource work overseas where you don't have the national insurance, or set up offices and factories overseas where they could otherwise be set up in the UK, setting them up overseas just because they can't afford to with these payroll taxes. It just makes it that little bit more expensive and makes it a lot easier from a commercial factor to look at relocating overseas. But if they did increase this, it would definitely be bad news for the UK. What would happen is, basically, businesses would just not be hiring as much as they currently are. It'd make it that much more expensive, and ultimately, what would happen in the long run is they would just add this to their costs of doing business, which would mean most businesses would just increase their prices because they've now got to pay more in payroll tax as their entire UK workforce, and it just trickles down. So that's exactly what would happen. They might as well just add another 5% on VAT if they were just looking to increase these payroll taxes, because that's how it would work. Some businesses would basically absorb the cost if they could, but the vast majority physically can't or won't, and it would just get passed on directly to consumers. So if there's any changes to employers' national insurance, this would absolutely be terrible news for people living in the UK, people working in the UK, because it would just be a lot more expensive for everybody. So as we've seen, I did a video on this a couple of weeks ago when it was first leaked, first speculated by the Labour-backed think tank, all about the UK exit tax, to try and keep the wealthy entrepreneurs in the UK and just make it so expensive that they can't leave. There's a lot more talk about this, a lot more speculation, and this is bad news for people in the UK, because as more and more get shared about it, the chances of it becoming a reality are increasingly so. And what this could look like would basically be, if you look to leave the UK, all of your assets which are situated in the UK or even potentially overseas would be subject to capital gains tax, which might also be increasing, as we saw earlier in the video, at the date you leave the UK, and HMRC physically won't let you leave, or they could give you a massive tax bill, look to seize your UK assets, put a bankruptcy petition on you and everything else if you simply don't pay it. And there's a lot more talk about this, and this is the worrying part, because as I mentioned, the more talk about it, the more likely it is to happen. And if you are looking at leaving the UK at any point, my best advice to you would be to look to do this ASAP. If you can before the budget, you can get a company set up in Dubai within 2 weeks, residency permit, intention to live here. That might be enough. If they do introduce it, we don't know exactly when the date will be, whether it's October or the start of the next tax year when it actually kicks in. It'll be interesting to see if this does come in, but if it does, it will be very, very damaging to the UK, because there'll be an absolute mass exodus of millionaires, of wealthy taxpayers who do pay the vast majority of taxes in the UK, leaving the shores, because you just can't be stuck in the UK facing 39% capital gains tax, increased employers' national insurance, all the other taxes that we pay, and then also this exit tax as well, keeping you trapped. It just does not make sense. It's effectively a tax prison that the UK is becoming. And lastly, there's also some talk and speculation about an annual wealth tax. So many different countries have this in place already, and broadly this is a tax annually on your wealth. So your net asset value, usually looking at your properties that you own, investments, shares, businesses and everything else, and over and above a certain tax-free threshold, you end up paying a couple of percent on this. And what this could look like in the UK is, say you've got a £1 million tax-free amount, all of your assets over and above that. So if you've got £10 million worth of assets, 9 million of those would be chargeable. 1% on that, £90,000 is what you'll be paying to HMRC each and every year in this annual wealth tax. There's lots of countries that have this in place already. There's lots of speculation and press about this. So again, with the exit tax, this could be something that has a decent probability of being introduced, just because of the amount of talk about it. So those are just some of the things that could be introduced, based off government leaks, speculation, articles and media coverage, especially from the think tanks. You can see here some of it does have very credible sources, and absolutely, you can't take this stuff with a pinch of salt. You have to look at protecting yourself, protecting your wealth from the government, who are clearly trying to take as much as they can, bleeding the golden goose absolutely dry. What are your thoughts about the budget coming this winter? Are you excited? Are you fearful? Have you already made plans to leave? Let me know in the comments, guys. I'd love to hear from you. Until next time, bye for now.